Welcome to TheoTrade. This is Don Kaufman, July 22nd, 2020. Few minutes after the bell here on a Wednesday afternoon. I'm going to zoom in right now so you can take a look, what I'm looking at here, and that's Tesla in the after hours. Of course, earnings are out on Tesla. Welcome to Mr. Toad's wild ride. You know the irony right now, though, of Tesla, if you're unfamiliar with looking at earnings here in the after hours, and I'll freeze this for a second. This is the last trade during the trading day. The bid and offer, of course, are live. That's what's going on here in the aftermarket. Tesla has moved, but what? But a whopping, $30 after the earnings announcement. It's still very early. Nevertheless, what we're going to talk about here on this evening's video is really, it's like the only thing that matters in earnings and earnings-related trades. And it has everything to do with what the option market depicts that risk to be. Let's get to work a little bit here on this evening's video. Again, there's a ton of earnings coming in the next few weeks, and each and every quarter, of course, we go through this, but we're actually going to display how efficient markets really are surrounding earnings announcements. We'll come back to Tesla here momentarily. Quick recap of the day. The S&Ps are up a whopping 15 handles today. Pretty nominal move with the Nasdaq down. One of the things that's kind of striking, and we've seen a lot of this in the last couple of trading sessions, and that is almost this like perfect rotation, of everybody out of the Nasdaq into the S&Ps, out of the S&Ps into the Nasdaq. There's been a lot of that going on, and ironically here, the Russell is kind of caught in the middle. The Russell only drifted a little bit higher, but the Nasdaq, and again, I'll come into earnings in just a moment here, but the Nasdaq just continues to have this like feverish trade inside of it. You don't want to trust it as far as you can throw it right now. And as I had pointed out on the Monday night video, it was really in contrast. Like on Monday, the Nasdaq actually ran up quite considerably. But as I said on the Monday night video, look out for the what I term the bidless beast to return, and you can see it inside of the Nasdaq the last 2 days of trade. In fact, bear with me here momentarily. So we're going to go from 1 day. I'm just going to pop open like the last 3 days on a 1 minute. When I start talking about, once again, the bidless beast, don't lose me here. Don't lose me. The bidless beast, what I'm talking about is the trade specifically inside of the Nasdaq, where it just gets seemingly out of nowhere, downright wild. And it is continuing to see that. Again, these are not per se news-driven events. This is algorithms coming in and literally just attacking, all out attacking inside of the Nasdaq. And of course, go back a few more days, you will see the exact same style of trade day and day again in some recent trade. This is going all the way back, of course, to Monday, which was the only recent trading session where we did not see that, again, as I term, the bidless beast emerge. And that's, again, it's precisely what we saw in today's trade. The Nasdaq dropping like a rock, 20, 30, 40 handles inside of the Nasdaq in a matter of moments. What you're looking at here in the after hours, that effectively is because of Microsoft coming out in the after hours. In fact, what you're also seeing right here, that futures contract just reopened just a moment ago, literally seconds ago, I should say. And there's a little bit of a bid back onto the Nasdaq here in the after hours. That's probably because Microsoft, a bit of a conversation piece as well, of course, as Tesla, which are the two stocks with earnings. So let's talk a little bit about earnings, and we'll jump back over to Microsoft for just a moment. When I say that there's, the only thing that really matters during an earnings trade, quite frankly, in today's marketplace, I've literally pushed aside. It doesn't matter, the conversation that's going to happen on CNBC. What do you think their numbers are going to be? What is going to be the earnings per share? I can pull all of that up as well. Most of it is, conjecture prior to that. When I say that I can pull it up, sure, look, they beat it on the cloud revenue. The market's going to love it. And by the way, they beat on earnings. Does that really matter? Why is the stock down right now? You don't have to question why the stock is down and why the stock's up. The only thing you really need to look at when it comes down to earnings, and again, it doesn't even mean that you necessarily have to trade options. Okay, you don't have to be an options trader to appreciate some of this stuff, but the aspect that you have to look at is right over here. It's what we term the expected move. Okay, and that expected move, right, at $9.60, lo and behold, that is the highest probability of where we are going to be tomorrow morning throughout the course of trade, specifically tomorrow. So that expected move, again, holds a tremendous amount of weight. Why so much weight in the expected move? Okay, well, it simply comes down to look at all the option volume, look at all the liquidity that's traded here. Think what you will about it. And people look at the stock and they go, wow, man, 46 million shares traded. Yeah, 46 million shares. Go take a look at option statistics. Okay, this is where you should be looking, right there. Almost 700,000 contracts of Microsoft traded. When you have 700,000 contracts of Microsoft trading, okay, how many shares of stock is that going to take to hedge? And the answer, that's pretty clear. It's probably the vast amount of that 46 million shares that traded today, traded around the fact that almost 700,000 contracts traded. What I'm saying is the shares are used as a hedge against the option contracts. So for the most part, what you have in trading these days, okay, are the options, which are, the cart, if you will, leading the horse. And that's why I'm telling you, it is critical to understand these expected moves. The highest probability, okay, the day after. Now, it's still early, and people are looking right now, and they're like, well, it closed. Let's just say it closed at like 212, and right now it's trading at like 206. It's only $6 off, and you said it was going to move 9. I'm not done yet, and neither is Microsoft. They haven't had the conference call yet. Okay, order flow hasn't necessarily played out. There's a whole lot of unknown to still come here, specifically in Microsoft. So when you're looking at these trades, think about the expected move. When you're long a stock or short a stock, okay, think about the fact that the marketplace right now is anticipating a $9 move, and that there are traders. Okay, and when I say a $9 move, you're like, well, what happens if it doesn't move at all? Okay, it will move to a degree, but there are traders on both sides of this marketplace. When you look at volume of a particular strike, and that volume is, look at that, 38,000 contracts of the 215 calls traded inside of Microsoft today. But each one of those contracts, okay, there's a buyer on one side and a seller on the other side, which is actually going to draw that product, all right to the edge of the expected move. What the expected move really is, okay, it's like an average of every option that's trading inside of this chain, all packed into one number. And all it says, and again, to kind of break this down, it says, I'm not sure where we're going, but we're going up, okay, or down about $9.62. And that's where everybody starts hopping on board and they go, well, I'm so bullish, I'm so bearish. Listen, I don't care whether you're bullish or bearish, all right? I've actually got a bearish position in Microsoft, okay? But I hedged it with a bullish butterfly because the bullish butterfly only cost me like 65 cents. So, yeah, you know what? Stock moved down. I'm a winner! If the stock had moved up, the butterfly probably would have covered it. But I put a butterfly right around the 220 strike. You know why I put the 220 strike there? Because had this thing gone up, it probably would migrate right to the 220 level. Nevertheless, here we are in the after hours. Oh, Microsoft, what's it doing right now? It went bottom fishing a little bit earlier. It's rallied back up, but don't worry, the day is young. They'll kick off the conference call. It's a party, people. We'll see how that one actually plays out. Now, one of the other areas, okay, that's interesting. And by the way, when it comes to this expected move, there are just so many different ways that you can trade around that expected move. The next thing that we really want to cover here is Tesla. Because Tesla, it really doesn't matter what you think about the earnings of this. The expected move was $225. And I read an article earlier in the day, and they said, no, that kind of move is just way, way overdone. Okay. All right, so Elon Musk has yet to speak. We're already closing in on, there we go, 1,700, and it's going to hit it while I'm live over here. And we closed roughly at 1,600. We're already up $100. It's still early. It's early after hours here. The information hasn't been completely disseminated, but give it some time. I'm telling you, pay attention to these expected moves. Now, it's not just about, people, one or two stocks. Okay. What I want you guys to understand about earnings and earnings related trades is, again, the only thing that matters is that expected move. And I say this because if you actually looked at data from literally hundreds and hundreds of earnings announcements, by far the highest probability is that we migrate to the edge of an expected move. Okay. In the case, again, of Microsoft, which is such a clean example, because Microsoft, again, it's what, about a $10 expected move. In the case of Microsoft, right, should move $10 higher or $10 lower. Okay. The question isn't, is it going up or isn't going down? All right. You can take shots on either side of that marketplace. The question is, again, the frequency of the expected move. And the answer is, okay, it is the most frequent move after an earnings announcement. We'll recap this in about 2 weeks after we get some earnings announcements out. I'll actually come back to this very idea, and I'll actually take you through earnings after earnings after earnings. Expect Microsoft. Microsoft's not done yet. They could come out and say something spectacular, and this stock could rocket right back up to 220. Okay. Or at some point tomorrow, expect that Microsoft is very likely to trade in and around like the 202 kind of range, taking it right to the edge, again, right to the edge of the expected move. So here we are in the after hours. A couple of major earnings are out. S&Ps are up. The Nasdaq actually pulled up out of the dumpster, massively unchanged on the trading day. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.